All right, everybody. Stocks by the numbers. Welcome back. Today is Monday. We got about 40 minutes to go before the close here, but I wanted to do a quick update here on this stock that we spoke about just a couple of weeks ago that has turned out phenomenally well for us. And obviously, I made a pretty good call here on this one. Name of the company, Coinbase Global Incorporated, ticker symbol COIN, listed here on the NASDAQ. Stock down to about 117 even right now, down about 12 and a quarter points, almost 9.5% here on the day. And we can see that this back here was when I spoke about the stock. I basically said that it had this massive rally. There was a potential long-term inverted head and shoulders that was forming, so I can appreciate the fact that the stock started to gain some momentum. And of course, with Bitcoin climbing as it did, they were basically taking any and all stocks associated with Bitcoin. They were just climbing them up and taking them higher. And I remember making the video and basically saying that in my opinion, this specific stock is up really for no reason. And we looked at their revenue and the way it has been falling off over the years. And again, even though the profitability has slightly increased for the year of 2023 throughout these 3 quarters here, overall the revenue is nowhere near what it used to be. There's a company that used to do 1 to 2 billion plus a quarter in revenue. Now they're struggling to maintain just a couple of hundred million. But anyway, long story short, I pointed out that we were pulling back, and in my opinion, we should go even lower. We had this potential bear flag that was forming, but we broke down, and as you can see, we chunked down even more today, and we're potentially in a little flag pattern here today. So in my opinion, I still stand by my analysis and say that this stock is very overvalued here, even at these levels, dropping roughly 40 points from the last time we looked at it. And I assume, well, not assume, but I'm basically predicting that, in my opinion, this stock is actually going to go sub 100, and I'm looking for potentially $88 a share. And we're going to look at stock charts in a second, and I'm going to show you that that is actually one of the moving averages that, in my opinion, this stock should be pulling back to. We have a market cap still up here at 28 billion, and you can see that for 2022 the company only brought in about 3 billion in change. And if we look at these 3 quarters here for 2023, add them up here, we're looking at about like 2.2 billion. So that's why, again, the company, if they bring in another 600-700 million, they're going to be around 2.9 billion for the year of 2023. And again, as we see, $28 billion market cap. So we have a company that, in my opinion, is actually struggling to bring in new users, right, to open more accounts. And of course, as I mentioned, that once that stimulus money kind of started to dwindle away, there was less and less trading and less volume taking place on the platform. And again, they make their money off of transactional fees. So their ideal clientele are clients who deposit a lot of money, consistently trade, and of course, you need them to be right more than they're wrong so that they keep trading. And unfortunately, in my opinion, I think we're just basically seeing the exact opposite of that scenario. And that's why I feel that Coinbase, in my opinion, is probably going to keep struggling. And I wanted to switch over here to stock charts very quickly here. And you can see that, again, you look at the RSI. I pointed this out last time in my video. The RSI for, like 6-7 weeks was sitting above that benchmark of 70. And this stock just kept climbing, again, in my opinion, just because Bitcoin was going up. All of a sudden, Bitcoin, begins to stagnate and slightly sell off. And then this stock drops like a rock and falls off a cliff, going from almost 190. Now it's down here to 116. Supposedly, we have a class action suit as well taking place here. Coinbase faces derivative suit over insider trading allegations. Now, obviously, we're not going to know the actual result of that until further down the road. However, of course, when something like that comes out, that is definitely a negative catalyst. That is not a positive catalyst. And we can see again today, the stock taking a chunk down right now, currently down over 9%. But you can also see, again, the MACD was flying to the moon, right? And then it just fell off a cliff, and it looked like it began to flatten out and potentially tried to cross back to the upside here. And we can see the rejection here on the daily of the mid-Bollinger Band, and then the stock started to drip down a little bit, and we can see the MACD again started to turn to the downside. And then, of course, the stock chunks down today, so now we're going to probably curl even lower, in my opinion. But now with the RSI here on the daily still sitting at a little below 36, in my opinion, I think it keeps going, because in all fairness, if we can keep it above the 70 benchmark and have it technically on paper overbought in the numbers here for 6-7 weeks straight, well, then we can probably take it below this sub benchmark here of 30 and make it oversold for a couple of weeks straight as well, right? So that's why, again, in my opinion, I mean, I wouldn't necessarily look at the RSI just by itself. However, in my opinion, what goes up must come down, and we can see here even on the weekly, random ad, we could see here even on the weekly, the RSI got well above 70 and was sitting there for a while, and now again, of course, you can see we pulled back here to about the mid-Bollinger Band on the weekly of 116.21. We can see the stock drop down to 115.80 and then had a little bit of a bounce there. So we may potentially have a slight little bounce off of this mid-Bollinger Band. However, now again, with these new allegations coming in, I actually have a feeling that a lot of people are just kind of jumping on the bandwagon and just potentially shorting the stock, and they might just be stepping in for some short-term puts just to catch it on another, 1 or 2 down days here to the low 100s or sub 100, so that they can make a quick, nice little trade and take the money and run there. And even on the weekly, we have the RSI sitting here still up at 51.5. So in the longer time frame view, technically on paper, in my opinion, this stock could continue to drop down lower. We also have the MACD recently. As we started to pull back off of these recent tops, you can see that the MACD on the weekly has now crossed to the downside as well, which is just going to add selling pressure to the stock. And of course, the 50-day moving average, this was the point I was looking at here, looking at the weekly, the 50-day moving average down here at 88.82. And in my opinion, that is where the stock, I feel, should be. The stock should be back down there, sub 90, and to pull back here to this bottom Bollinger Band here, 50 or 60, that might be an extreme drop. However, again, in the numbers, I still stand by my analysis, and I do feel that over time, this stock could easily drop 40 or 50% from this current level, this current valuation here of $28 billion market cap, when they're struggling to bring in $2 billion a year. But again, coming down here, this 50-day moving average on the weekly, 88.82, in my opinion, is my next price target level. And I am pretty confident that we are more than likely going to continue down to that level. Again, new allegations coming in here, insider trading. So, not necessarily just patting myself on the back, but I wanted to do a quick update here on Coinbase Global, ticker symbol COIN. And of course, we got this call right. And in my opinion, I just feel like, as I always mentioned, if you're going to do the option side as opposed to the share side, when looking at these situations, if you're able to afford time, in my opinion, that drastically increases your success rate. And I know it may seem like a very simple rule. However, at the end of the day, today is Monday, tomorrow's Tuesday. So if you're going to take a position like this, looking at an overall analytical view here of a stock, it's much easier if you're able to buy, in this situation, right? You'd be buying puts if we feel the stock is going lower. But you would be much more successful if you're able to buy 2-3 months out and just position yourself nicely to where you have less theta decay, and of course, more importantly, you have enough time for the stock if they want to try to delay the inevitable move, and you can still come out on top and still turn out to be successful. Something similar, just like a Hershey, right? When I first spoke about Hershey, I mentioned that this is one that you would probably want to give some time. And I mentioned that down there at like the low 180s, even when I speak about it in Discord, when it pulled back to like 190, 191, I said, if you're going to step in here, in my opinion, and you're going to step in and you're going to ride this U-turn now on something like a Hershey, this is going to be a slow, steady climber. So if you happen to buy the calls on something like that for that Friday, and it didn't work out, of course it's unfortunate, but again, at the end of the day, sometimes it takes longer than we might want, which is why if you're looking for a quick move, but you're able to buy even the following Friday or 2 Fridays after instead of that Friday, it's much more advantageous for you. And of course, something like a Hershey, instead of buying 2 or 3 weeks out, if you are, if you are potentially able to buy 2 or 3 months out, especially if you're able to get a strike price after earnings, Then what you can do is, if it's timed correctly and it is at a deep discounted price and we feel it is inevitably going to keep climbing, not only are you going to make money off of the U-turn, but also the rally and the volume coming into the stock 1, 2, 3 days before they post their next earnings, right? That's going to help further fuel the value of your calls, so that if you want, you can then liquidate the position going into earnings and not even have to take that risk, in my opinion, of waiting and hoping that they beat those earnings. Or, of course, on the flip side, if you have 10, 20 calls on something like HSY, earnings are coming up, they pump the stock, you can liquidate and take profits on 70, 80% of the position, and you can leave a couple of runners going into earnings. That way, you still have some skin in the game, so to speak, and you can ride the earnings play. But yeah, overall, Coinbase here, in my opinion, phenomenal call. And again, I mentioned that a lot of these stocks that get pumped, I feel for no reason, sometimes it's almost easier to anticipate the sell-off as opposed to trying to find the perfect stock at the perfect price and trying to time the upward explosion as well. So, obviously there's both ways to play these, but got it right here with Coin, and I'm going to end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But of course, more importantly, moving forward, like I always say, I understand that markets are rocky and volatile and very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by. I'll see you guys in the next one.